Well, hello, active traders. This is Ken Calhoun from Trade Mastery and Day Trading University with trading strategies that I'm using in my own live real money account for one of my accounts for my inverse ETF positions that I put on Friday. And I thought I would help you understand my 2-day low stop loss strategy for swing trades. As always, all information is for educational use only. I'm not making advice or recommendations about to buy, sell, or hold. I've always disagreed to not make actual trades. It's all for information and educational use only. So, on Friday, I went short the market big time. It was around $17,000 worth of a variety of different inverse ETFs that I put on trades in, anywhere from 10 to 100 shares. Okay, so I'm short the market, around $17,000 worth of ETFs and ETNs. What I did this morning was set sell stop orders in for every single position, roughly about 70% of the open size in those. So for example, last triple Qs, I put a sell stop order at 1320, limit 13. So it will close out 60 of the 100 shares if we get under 1320, which is right about here. That's a 2-day low. And if you remember, my strategy that I like to teach traders is to use an aggregate 2-day low is the price that proves a swing trade wrong. Now, I don't sell at support because oftentimes you get a false breakdown to 20 or 30 cents because of the sheer momentum of price action. Let's say this guy gaps down on Monday and keeps collapsing on down and then bounces. Well, fine, I leave it alone. If it keeps going on down through my sell stop order, then I go ahead and take the stop loss. One thing I immediately do, though, what I found is very important in our volatile whipsaw charts, is to reset a buy signal slightly above where I got stopped out. So let's say I get stopped out at 1320, I'll rebuy the shares at say 1360. Because oftentimes you'll see a pivot with the institutional buy and sell programs kicking in around 11 o'clock, as we've seen very often recently. There's often a pivot at 11 or 12 a little bit later in the day. But 11 o'clock's been a key pivot time. So if you do get, at least if I get stopped out, I will always rebuy into the bounce. And that's one thing I did earlier this week in my live trades. Let me take a look at a 3-day chart here. I was buying into the close here. I took stops on the way down and I rebought into the last half hour of the day correctly and successfully, which is as it turned out. And now these guys gapped up, which is back in my favor, and that's good. But then you take stops on the way down off the 11 o'clock pivot and rebuy either later in the day off the midday pivot or into the close to reestablish or reinitialize the position. So it's a very tough market to trade right now with these inverses. I like to trade them because if the bear market fear continues on and these guys continue on up, we've got spectacular upside potential, right? And see how strong the trend has been lately. But still, you always plan for the worst. If there's a short squeeze and a long bias and value buyers coming in come Monday morning, I don't want to take a big hit and say be long from 32 and ride this down to 25. I'll stop out right in the where's it stop in SRTY? Put it in at 30 even. So if it gets under this 30 mark, I'll stop out here, but then I'll rebuy later in the day if it comes back to life, because I still want to kind of thread the eye of the needle in these charts. So the strategy is set a stop, at least what I do is I set a stop at a 2-day low plus 20 to 50 cents under that as a safety buffer to avoid a false breakdown. So slightly under a 2-day low. And then look for a pivot 2 times, one is 11 or 12 o'clock when the buy or sell programs kick in, and the other is into the market close between 3:30 and 4. And that way I can reallocate capital to these positions as they're open. We got some spectacular moves, right? So the price that proves a swing long is an aggregate loss of 2 days support, say down here. Now, the other quick tip is, and this is true for all swing trades, this is how I swing trade. You set your initial stops, which is all well and fine, but you need to readjust them often between the 9 and 9:30 opening bell based on the gap size of however it gaps pre-market. So for example, let's say these gap in my favor, and let's say VXX gaps up to, say, I don't know, 43. I'll put a sell stop in at, say, 41.40. So that way I protect profit if it does start to take some back, because, oftentimes these guys will gap multiple points. So if this gaps up to, say, 43 on continued concern in the market and blah, blah, that's good. I'm happy because I'm long this instrument, but I don't want to give back profit. Let's say later in the day or the midday buy programs come in into the broad market and we get the midday pivot and it comes back down. I want to take profit because it may keep going down, and I don't want to lose money in the trade, so I want to lock in a profit. If it does keep going up, let's say it gaps up to 42.50 and continues to run, then I may scale in or add. I will incrementally add. Let's see, VXX, I'm currently long just 50 shares from an average cost basis of 40.34. Okay, so I'm in from right about there. Just around 40 cents against me right now, but I bought into the close, say 40.34. If it gaps up to 42 and runs, I may buy another 50 shares up at, say, 42.5. So I'll scale in, but I started off relatively small, under 100, 100 shares or less on each of these trades. And that way, if it goes against me, I can stop out at a low. I'll likely tighten it up to right here. But, if it gaps down here and continues to go down, I'll sell out at a 2-day low. If it gaps in my favor, I'll add to it up at a 2-day high. And if it just kind of chops around, which is often the case on a Monday, then I'll leave it alone. So anyway, I hope that helps. That's good, professional trading tips on at least how I like to manage my trades in and out using real money trade examples so that you can see, not only do I teach this stuff, but I actually use it in my own real trades as well. And hopefully things will work out. $17,000 short the market going into the weekend. We'll see where it goes. By the way, if you're not yet a member of my live room, you may want to try it out at tradingtheopen.com. Rates are as low as $97 a month if you go for the annual plan. If you do month to month, it's $147. And if you haven't ever done a trial before, I certainly love to see you there with all of our other traders, where all the smart traders hang out. 30-day trial is just $7 with a money-back guarantee, of course. So you can try it out for a month for only $7, and if you want to stick around, fine. And if not, that's fine too. I like to do a very focused approach for trading. I run the room Tuesday, Wednesday, Thursdays because that's where the best volatility tends to occur in the market. Mondays and Fridays tend to be relatively quiet. You can see here, for example, let's look at the spiders. Or Monday, Fridays. Look at last week as perfect proof positive of what I talk about, and the week before, about the fact that Mondays and Fridays tend to be less volatile and not as worth trading. Friday had a very small candle, kind of choppy day. Thursday, Wednesday, Tuesday had much larger candles, much more volatile. Monday had the second smallest candle. Mondays and Fridays, flat candles. Tuesday, Wednesday, Thursdays, that's where the action is. Previous week, that's Friday. Okay, there's Thursday, Wednesday, Tuesday, and Monday. Tuesday and Thursday were the big days week before last. Last week it was the Wednesday sell-off. So the biggest times in the market tend to occur during the middle of the trading week, kind of like a bell-shaped curve with the tail ends of the distribution being a Monday and Friday. So, that's another market phenomenon to pay attention to is day of week effects. That also helps. But anyway, the market's been looking real distressed, which is why I shorted by going long these instruments, which all look pretty healthy. The trick is to stay alive in swing trades without getting shaken out on pullbacks, and that's why using things like the 11 or 12 o'clock buy and sell program pivots, the end of day close, the open range breakouts and gaps, and the rest of it really makes sense in our current markets because that's spectacular upside in these charts. Anyways, I'm Ken Calhoun wishing you the best. Trade smart out there. Use tight stops. And best wishes for success in your trades. I'd certainly like to see you in my live trading room. So see you there at tradingtheopen.com. Goodbye.